and was great as always. More digital credit, more Bitcoin dividends coming in, I guess, with Roxom.
Insane.
So congrats.
Insane. What, like, please tell us, what's your comments, man?
I fully agree with Matt when he says that people are not bullish enough. I've been coming in every Monday together with you, and you've told me a few times that I was quite bullish, but every time I get more bullish. And that's because of all of the conversations that both, I guess, Matt and I and more in the space are having every day with a lot of investors, with a lot of institutions. And you can just see that everybody is piling into digital credit. You can see that this is taking a traction that we have not seen in the past, and a traction that is not even dependent on the Bitcoin price. So in the past, when a Bitcoin Treasury Company would go into roadshows and talk about the prospects of the company and raise capital, and in fact, that's what we just did last week, of course, and we just announced 192 BTC more. You are talking about the prospects of Bitcoin, about the prospects of the Bitcoin Treasury Company, about its capacity to lead the way for digital credit into a specific market and so on. But when you actually get into digital credit and you get into the investors that are interested into digital credit, you really talk about risk, about transparency, about capital structure management, about consistency, track record, and about the soundness of a financial instrument. And so that's a whole other discussion that then knowing what will Bitcoin do in the next months and in the next years and so on. If Bitcoin is here to stay, and that is, of course, our strong conviction, then the digital credit product that can issue the best Bitcoin treasury companies have such a value proposition, such a best risk reward proposal in the market. And when you combine that with players like you at Roxom and others that can provide that tokenized, that streamed version of the product, then you can just see that this is a product that has infinite market fit. And it's infinite market fit because fiat has no limit on the cap. And so we really see that instrument as a scaling function for the Bitcoin adoption in the world. And that's what people don't see on top of it, because every time I'm having now interviews with traditional mainstream journalists, they're like, what is happening with Bitcoin? We don't see a lot of headlines about new companies adopting it and so on. And they don't realize that there is a very small number of firms, of companies, of institutions that are literally buying up number of Bitcoins that exceed what would a higher number of companies would buy. And because a strategy is structured for this, Strive is structured for this, Metaplanet is structuring for this, and Capital B intends to structure for that. So you really have, like, even with a few players, the structure of the market in terms of offer and demand is so much structurally changed, and for the long time, that that information asymmetry has never been that high in my view, and that's why people are not bullish enough, because like just today, strategy crossed like 4% of the total BTC supply, and their velocity of accumulation is increasing. So that's really notable, and Strive is being accelerated by that strategy performance, and our digital credit plans in Europe are being accelerated by the performance of strategy and Strive, and this will push a new wave of digital credit adoption that will flow into Bitcoin, and that's permanent holding capital as well. So yeah, very bullish.
Alex, what is an excuse to not be at least testing digital credit today if you're a normal like player in the market? Like what? And I'm asking this because it's growing very fast, but being the fixed income and so on categories being like several like trillions of dollars, like how is it that it's only ten billion dollar yet? Is it because the the Bitcoin risk it's still very strong? Like what do you think is the institutional view on these products?
The biggest constraint or excuse is not actually the willingness of those institutions to come in. They all want to come in. The real constraints are more geographical constraints with institutions that have mandates to invest in specific countries, in specific regions, or mandates that institutions only have the right to buy products that have 2 3 years of track record, or mandates that have limits in terms of the credit rating of the instruments, or mandates that have restrictions on the type of product that they buy. Some can only buy shares, some can buy preferred shares, some can buy bonds, and so on. And so it's more those structural aspects that make it having a lot of upside for the long term, and at the same time that the upside is we are very much at the very beginnings, because today, as strategy reports, 80% of the demand is actually coming from what is called retail investors, which in fact includes a lot of different family offices and in fact a lot of very high net worth individuals. But still, you also include a lot of very Bitcoin-oriented hedge funds and so on. And so the growth of digital credit that we see today is very at the birth of the asset class. For
Yeah,
us, it seems extraordinary and so on, but it's still 10 billion in the grand scheme of capital markets.
yeah,
And so you have to imagine that some institutions, they also have mandates to invest only in sectors, asset classes that reach much more size than what we are today. And so each level that you rise, you reach new institutions, and each new meeting between strategy and regulator, strategy and credit rating agencies, strategy and new types of investors that update their mandate policy and so on, together with Strive, together with MetaPlanet, together with Capital B, and the many more companies that will come, you just have incremental, exponential progress that grows as a network, and digital credit is really growing at a speed that I had not even witnessed before. Like, not even, when we were back in May and June, at the speed of the adoption of Bitcoin Treasury companies, that speed is lower than the speed that we are noticing right now in terms of the interest in digital credit from traditional financial institutions, because they see that they can get a form of exposure to the Bitcoin type returns without almost the entirety of the volatility, and that's just an amazing proposal.
oh, very clear. And Alex, Eh, going back to the thing that brings us every week here, which is Bitcoin, all right? We've been covering a lot of digital credit. How are you seeing Bitcoin right now?
Well, Bitcoin is in a special phase that is called consolidation. It is no surprise after each bottoming area and during which bottoming phase, Bitcoin has gone through consolidations. And this is just the time where the sellers have sold, the buyers are all in, and so the Bitcoin price is hanging around within a range that is being traded by hedge funds globally. and that is really between the 60K to the 90K dollar range.
Mm-hmm.
And you don't know if Bitcoin will go towards the lower range or the higher range. What you know is that you have market participants that are not tourists. You have long-term accumulators, you have hedge funds and traders that trade that range, but the tourists are gone. And so when the tourists are gone, you can just see in the charts, if you notice enough, you can see that when it goes down, you reach quite fast some levels of support and it goes back up again quite fast again. And sometimes you can go down a bit, sometimes you can go up a bit. It's just an accumulation zone that is of advantage for all participants, because all participants in some way, shape, or form are bullish on Bitcoin on the long term, and they can accumulate more at lower prices. So I think that you just have to wait for monetary conditions that can change. You have to wait for geopolitical tensions to be appeased, and you have to wait for some type of visibility in terms of what the new Fed chair will do in order for the hedge funds to really take a specific position up or down, and to have the market move in strong directions again. And until then, it's just great opportunities to accumulate more Bitcoin at frankly levels that I could not imagine to have the opportunity to stack Bitcoin at those levels at capital B in 2026, and it's really a major opportunity for us to accumulate.
Do you think we could be going lower?
Always, you have to be prepared to go lower. You have to, in fact, take advantage of going lower if it happens.
Yeah.
And I think that's also the importance of being on a Bitcoin standard, looking at the number of Bitcoin you own, because
Yeah.
ultimately that's what will define value over the long term. And at the same time, that's also why digital credit is so strong, is because a lot of investors that are interested in Bitcoin have no capacity to handle those volatility periods, and they just prefer to have a paycheck in US dollars. And so our role as Bitcoin treasury companies focused on increasing Bitcoin per share is to be that player that will consistently accumulate Bitcoin, whatever the conditions, and so that the market can either take the same road as we take and be shareholders and go into that long commodity capital assets roller coaster, let's say. And on the other side, all of our investors, and I think that represents 90% of global capital, even more, can focus on having high yield instruments that are provided by those big balance sheets. So yes, we can go lower. And at the same time, we are in the bottoming phase, in the consolidation phase, and we are heading right into the next bull market. And all Bitcoin major players that are in the space are positioning to get optionality, convexity, and really maximize their exposure to Bitcoin right now, and their exposure to Bitcoin treasury companies and their ability to take advantage of the next bull market right now. In my view, this resembles really a lot the pre-2024 market, the 2023 to 2024 market that we had. It going in sideways. Nobody understands the significance of what is happening. You know, it was kind of crazy at the time where everybody had the information that the ETFs were coming.
Mm-hmm.
I feel that's similar. Like everybody has the information that digital credit is taking so much traction, and that is transforming the market. And yet you have like 99.99% of the population that has absolutely no idea what is digital credit yet. And yeah, I think it's just an
You-
asymmetric opportunity. And when you have that opportunity, it's even kind of crazy that that level of information is available today. Like 20 years ago, in traditional capital market, traditional equities, you could not even think of having access to such level of information about the companies you would invest in.
Yeah.
And today, the fact that you have that level information, you have that level of information of the power and adoption and strength of digital credit, and the companies that are focused on it, in my view, will be really taking a big advantage over the next 3 to 5 and 10 years.
Alex, do you think there's a sort of a triggering effect there for the starting of the bull market, either like macro wise or institutional wise, or just anything you are foreseeing for it to start getting the pace you would like to see, or anything?
What I feel is that the market doesn't even need now any external specific factor. So, I mentioned that, of course, for me, the biggest factor, or the biggest, let's speak about external factors. I think that's maybe your question. The biggest external factor right now is the tension with Iran. And you can see that Bitcoin is just moving around together with that geopolitical tension. And so, whatever will make that conflict go away or be solved in a durable way will push Bitcoin back to the all-time highs. And so the question is, as an investor, do you want to bet on one side or the other, or you don't? Whatever your choice, Bitcoin in any way, the conflict being solved or not, Bitcoin is going higher because in either way, governments are going to print a lot of USD and a lot of euros and a lot of yen and so on. But in terms of short-term indication, that geopolitical conflict, in my view, is the biggest one. Then the relationship with China, Taiwan, and so on, that's second one. And the third one is the impact of AI in general into the savings of American investors, because the American retail investment market is driving a lot of the market. And when you know that a lot of jobs are at risk and that can reduce savings rate, well, the first order effect is definitely that can reduce investments and liquidity, especially with the size that AI is taking. And at the same time, on the medium to long term, and that's why you need to be a long-term capital investor to take full advantage of that macro context that reduces liquidity in the short term right now, which is why the price of Bitcoin is being challenged. Well, challenged at 70 plus K. Yeah? So compared with the past, I think everything is relative as well. But all of those things I mentioned, which are challenges in the short term in terms of liquidity in the market, are the full drivers of the next enormous wave into digital capital, because of the AI wave that will drive a lot of profits into the most brilliant minds in the world, and they will choose Bitcoin as a long-term store of value. And because the geopolitical conflicts will push as well more energy prices going up in certain regions, which will push government to print more money, which will push a lot of Western governments to reindustrialize their manufacturing and energy functions as well, and that will need to be financed in some way, and that will come from more money printing as well. And all of that money printing will also come back down to Bitcoin over time. So it's really an arbitrage between the short-term pain that a long-term investor can feel and the long-term maximization of overall portfolio return that is achieved by being on the side of scarcity and of the highest demand as a consensus, and that consensus is forming around Bitcoin and digital credit as we speak in the digital capital markets era. So that's, in my view, the same reasons for why liquidity is shortening between last months of last year and early this year, for those same reasons that liquidity will expand in the next years as well. So be prepared and own Bitcoin.
Alex, can you please tell us about the good news that you brought for the Capital B shareholders of today?
Yeah, sure. So last week we discussed, of course, the raise that we did that is very substantial because it allows us to accumulate more than 180 Bitcoin. It's 192 Bitcoin this morning, which brings us towards and to 3,135 BTC, which is quite a strong level globally and in Europe, of course, and which accelerates significantly our digital credit focus. One, by, of course, increasing the size of the balance sheet directly with a raise that was done at the market conditions, and with a second wave of additional capital that's optional in the future, but that can be accelerated by the company whenever the conditions of plus 30, plus 70, plus 100% are reached, of about 100 million euros more, $120 million more of capital. And if you combine that level of Bitcoin that we have now, plus the potential Bitcoin that the company could accumulate with those additional capital raises that are structured already as options, you could go towards our objectives of 7 to 15,000 Bitcoin by the end of 2027 through, of course, those raises, through the potential of digital credit issuance, and through as well the further potential for new raises that the company would do towards more digital credit issuance. So that's really in the direction that we have set for ourselves at Capital B, to be the strategy, the early stage strategy for Europe, to focus on the implementation of digital credit at scale from a European issuer, and that can really provide an upside that cannot be really met in traditional markets, both, of course, in the digital credit side and on the equity side. That is our objective, to become the largest capitalized company in Europe. And I think that this rise is strategic in that perspective because it creates the path for levels of Bitcoin that can double, triple the size of the company, both with the equity and with the digital credit scaling over time, and specifically create the right conditions to maximize how the company maximizes the accumulation of Bitcoin and the accumulation of Bitcoin per share as we enter, as we go from that consolidation to bull market scenario that we are positioning for. So really great news, and great to see so much great reactions in the market, even if the price of Bitcoin today, of course, is going slightly down. But what matters is really the addition of Bitcoin per share. every single operation we have done in the markets since November 2024, the launch of our strategy, has increased Bitcoin per fully diluted share in a systematic manner. And that's our full focus. And I think something that people don't realize is that today we have no fiat leverage on the balance sheet with our Bitcoin Treasury Company strategy. And if you understand the magnitude of the potential of that for strategy to go towards digital credit, you see that there is a massive value potential for the company to generate and grow much further together with the rise that I mentioned and their options in the future and the further potential digital credit that we can develop on top of that. So that's, of course, objective, and that's the focus. And of course, for investors, be careful, stay safe, do your own analysis, and do the math. And would like to also thank the creator of the CEBE, the CBE framework for analysis that did a great analysis of the company recently as well, and many more, Be the Moon and many more that have done great analysis on the company and its unique structure. And we think through every detail and for the maximization of Bitcoin per share in a way that's also in the long term with conservative Bitcoin maximalist principles and that take full advantage of capital markets.
Alex, as always, this has been great and wonderful. Thank you so much for coming here and sharing your knowledge, your insights, your absolutely everything. Any final remarks before you leave that you want to give our audience for today?
Yes, you are not bullish enough.
All
That's
right.
the message. But be patient, of course.
All right.
Yes.
Bueno, Alex, thank you so much as always, and see you next time.
All right. Take care. Cheers. Thank you so much, guys.
Bye bye.
Cheers.
Bye, Alex. See you soon.
All right.